In this episode, I will show how you can invest £15 or less to buy each of the 5 largest tech giant stocks known as Faang, F-A-A-N-G. And the 5 companies are Facebook, Apple, Amazon, Netflix, and Google. Why is it important for you to own these stocks? There are several reasons, but the primary reason is thus. You are and I are using the products created by this tech giant, and we have contributed to the growth of these companies. So why not buy the share and own part of the company and then earn some money? Yes, I said £15 or less. Okay, you're probably thinking there's a catch. No buts, no ifs. Stay tuned. You will get the answers to all your questions. Welcome to my channel. Time to subscribe. What makes Faang stocks relevant? Why are Faang stocks inevitable for most stocks investors? I will provide the answer shortly. Stay tuned. Well, according to recorded data, over the years, the combination of these 5 stocks have shown impressive growth. Besides, they make up a significant portion of the total stock market capitalization. In effect, their price movement can have an impact on the market as a whole. According to figure, US stock market in 2001 was pegged at around $10.7 trillion, and shortly afterwards, when Netflix and Facebook, the 2 companies among the 5 Faang group, go public, the figure rose from $10.7 trillion to $31 trillion. And by 2019, Faang stocks worth more than $3 trillion, meaning these companies worth 1/10 of the US stock market value. That said, it is also a fact that each individual stocks that constitute the Faang family is not cheap. Amazon at $3,125, Facebook at $254, Google at $1,458. Well, credit should be given to those who initiate fractional shares strategy. With fractional shares and using Trading 212 platform, you can now create a Faang portfolio or include Faang stocks in your portfolio if you like. Okay, let us buy Facebook shares. Facebook is a globally known social media platform with a user base of more than 2.5 billion as at August 2020. It could be argued that 30% of the world's population uses Facebook, making them a valuable customers. Okay, before I soldier on, I want to believe you have created a free online account with Trading 212. And if not, at the end of this video, you will see a link in the description and comment section. If and when you use the link, you and I will get a free share worth £100. Alright, let's buy Facebook. So we're spending £14.25. You do review, but we're not going to buy it. But that's the procedure. When you want to buy it, you just send. Okay. Next is Amazon. The company started selling books online in 1995. Amazon is the world's largest online retailer. Besides, the company is also the leader in cloud computing solution through its Amazon Web Services unit. online streaming of music and movies, and investors have been rewarded with profitable returns as Amazon stocks price has tripled since the start of 2016. Let us buy Amazon. Okay, let's say we spend £14.79. We're not going to be buying it. Next is Apple. Apple started as hardware company with the history dated back to the emergence of personal computer in 1970 and 1980s. However, with the recent development, that position is changing. Apple recently showcased its new subscription offerings, the Apple News Plus, Apple TV Plus, and game streaming services. According to report, Apple realized a profit of $10 billion of revenue through its services in the first quarter of 2018. And the share price of Apple have more than doubled since the start of 2016, making investors richer. And to know more about Apple, check my video titled Apple Stock Split. You will see it at the end of this video. Let us buy Apple. Let's say we buy 0.16 worth of Apple. That gives us £14.35. Remember, £15 or less, we are not spending more than £15. Okay, so we are not going to be buying it. This is for this purpose. Next is Netflix. Netflix used to rent or lease DVD to customers in their various stores and by mail. However, it has shifted to streaming movies and introduced original content. At present, it has over 150 million subscribers who are willing to pay between $8.99 and $15.99 per month for its streaming services. Let us try and buy Netflix. Let's say we buy 0.03, which is £12 and 0 pence. You click review. We're not going to be buying it. That's just the procedure. And the last is Google, the world's most popular search engine. It also have a wide range of investment from self-driving car tech, smart cities, and biotech. It also owns YouTube, one of the largest social media platforms. Shares have more than doubled since 2015. Investors who invest in Google earlier have profited handsomely. Let's try and buy it. Let us buy 0.01. That gives us £11.42. Now, let us add all this figure together. Figure the overall result should give us £66.87 or £66.90 thereabout. Meaning, you don't need lots of money before you start investing. Start now. Use the link below. Create account with Trading 212 and get a free stock. And for staying with me to the end of this video, here is your bonus. The term Faang stocks, the acronym, was coined by CNBC host Jim Cramer in 2013 and now widely used by market analysts. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.